welcome to everything you need to know about finance, and welcome to a really special deep dive today. We're, pulling back the curtain on something huge in modern finance, Bitcoin.
Yeah, it's definitely a big one.
We're going to look at its journey, right, from those kind of mysterious beginnings all the way to where it is now, this global thing. We'll touch on the tech, the wild history, and how it's actually changing things for investors, maybe like you.
And just before we jump in, really important to say, everything we talk about today, it's just for information, based on data that's out there. It's to help understand things. It is absolutely not financial advice. Please remember that.
Couldn't agree more. So yeah, Bitcoin and the whole world of digital assets, they've been in the news for, over 10 years now?
Easily.
But the last few years, maybe even just the last year or so, it feels like it's just exploded into the mainstream conversation. You see these huge price jumps, and now there are these new ways to invest, like Bitcoin ETFs.
Right. The ETFs have been a big development.
It's just this fascinating, sometimes really controversial digital currency. And our goal today, our mission, is to really try and get our heads around what makes it tick.
Let's do it.
Okay, so let's unpack this right from the start. For a lot of people, myself included sometimes, Bitcoin just seemed to kind of appear. What is it fundamentally, and where did this whole digital revolution, kick off?
It's a good question because it did feel a bit like that. It was conceived back in 2008 by someone, or maybe a group, nobody really knows for sure, using the name Satoshi Nakamoto.
The legendary Satoshi.
Exactly. They published this white paper, you might have heard of it, called Bitcoin, a peer-to-peer electronic cash system. And the core idea, the real revolutionary part, was creating a digital currency that was completely decentralized.
Leading from no central control.
Precisely. Designed to work totally outside the control of any one entity. So no central bank pulling the strings, no government oversight, no single company in charge. It was about removing that need for a trusted middleman, like a bank, to okay transactions.
That sounds pretty radical for 2008.
It really was a direct response, many think, to the financial crisis happening then.
So it went from this idea, this paper, to actually being a thing pretty fast then. I remember the open source launch in 2009. And that Genesis block, the very first block mined, what was that message inside again?
Yeah, the Genesis block. That's really where the network sparked into life. January 3rd, 2009, Nakamoto mines this first block. And yeah, embedded right in the code was this text. The Times 03 Jan 2009 Chancellor on brink of second bailout for banks.
Wow. Talk about making a statement.
Exactly. It wasn't subtle. It tied Bitcoin's birth directly to the perceived failures of the traditional system. And then you can't talk about early Bitcoin without mentioning Bitcoin Pizza Day, May 22nd, 2010.
Oh, yeah. The pizzas.
The infamous pizzas. That was the first known time Bitcoin was used to buy something real world. 10,000 Bitcoins for 2 Papa John's pizzas.
10,000. I mean, you wouldn't even buy a slice with that now. Probably much less. It's just mind-boggling.
It really puts the price journey into perspective, doesn't it?
Absolutely. So, okay, for listeners who kind of get the idea but are maybe fuzzy on the mechanics, how does this digital money actually work? On a basic level. Yeah. What keeps it running and secure if there's no boss?
Right. It's the technology underneath the blockchain that's key. Think of it like a giant shared public spreadsheet, a digital ledger. It records every single Bitcoin transaction ever made.
Okay, shared ledger.
But the crucial part is, it's not stored in just one place. It's distributed, copied, and constantly updated across thousands of computers, these nodes, all over the world. Every node has the same identical copy.
So you can't just hack one central server.
Exactly. There's no single point of failure. It makes the whole network incredibly robust and really hard to tamper with or shut down.
Okay, distributed ledger.
Yeah.
But how do new transactions get added? And how do you make sure it's all legit without, a bank verifying it?
That's where mining comes in, and this concept called proof of work. So when new transactions happen, they get broadcast to the network. Miners, who are essentially running very powerful computers, race to solve these really complex math puzzles.
Puzzles, like Sudoku.
Maybe a bit more complex than Sudoku. It takes a massive amount of computing power and energy. This whole process is the proof of work. The first miner to crack the puzzle gets to bundle the latest transactions into a new block, add it to the chain.
The blockchain.
Exactly. And as a reward for doing all that computational work, they get paid in newly created bitcoins.
So that's where new bitcoins come from.
That's the main way, yes. The reward used to be 50 bitcoins per block, way back when, but it halves periodically. The most recent halving was in April 2024, so now the reward is 3.125 bitcoins. This whole energy-intensive process makes cheating the system incredibly expensive and difficult. Security through computation, not trust.
Gotcha. And one Bitcoin can be split into smaller bits, right?
Oh yeah, hugely divisible, down to 8 decimal places. The smallest unit. It's called a Satoshi, named after, the founder.
Okay, so that's the foundation. But like you said, the journey. It gets really interesting here. Bitcoin didn't just smoothly become accepted. It had this early phase, didn't it, linked with, well, shadier parts of the internet, like Silk Road.
Absolutely. That early association definitely colored how people, and especially regulators, saw it initially. And they reacted pretty quickly. You had FinCEN in the US, the Financial Crimes Enforcement Network, putting out guidelines for virtual currencies like Bitcoin way back in March 2013.
So they were watching.
They were definitely watching, and governments started cracking down, like the FBI seizing a load of Bitcoin from Silk Road later that year. China also made a big move in December 2013, banning their financial institutions from using Bitcoin. That definitely hit the price back then.
So it had this sort of underground vibe, maybe a bit controversial. But then fast forward a bit, maybe around 2020, it felt like the mood changed. Suddenly you had big, serious companies getting involved. What flipped the switch?
That was a real turning point. A huge shift in, let's call it, institutional sentiment. You saw major companies like MicroStrategy, Square now, Block, even insurance giants like MassMutual starting to buy Bitcoin. Not just speculating, but adding it to their corporate treasuries.
That's a real asset.
Exactly. Treating it as a potential store of value, maybe a hedge against inflation. That was a massive signal. And then PayPal jumped in, letting U.S. users buy, hold, and sell Bitcoin right on their platform in late 2020.
That must have brought in millions of new users.
Oh, absolutely. And all this new interest, both institutional and retail, pushed Bitcoin's total market value, the market cap, past $1 trillion for the first time in February 2021. That wasn't just a number. It was like, okay, this is a serious asset class now, even if it's volatile. Traditional finance really had to sit up and pay attention.
And it wasn't just companies, right? Even entire countries got into the game, which stirred up quite a bit of debate globally.
Yeah, El Salvador made headlines in September 2021. They adopted Bitcoin as legal tender alongside the US dollar. A really bold move aimed partly at financial inclusion.
How did that pan out?
Well, it highlighted the massive challenges, frankly. Integrating something so volatile into a national economy, it got a lot of criticism internationally, and adoption within El Salvador itself has been kind of low. Infrastructure issues, worries about financial stability. It's complex.
But it showed the potential, maybe.
It showed the ambition, certainly. And Bitcoin also popped up in other unique situations, like during the Canadian trucker protests in early 2022. When traditional funding got blocked, Bitcoin became a way to raise money. But of course, alongside these milestones, we've seen brutal price drops too. Remember the collapses of TerraUSD and Celsius Network in 2022? Those caused major crashes.
Right, the volatility is always there.
Always the elephant in the room. But it's also shown this weird resilience, bouncing back time and again.
Speaking of bouncing back, the last couple of years have been particularly wild. What are some of the big moments, say, from 2023 and 2024 that really stand out?
Oh, definitely. 2023 and 24 brought this fresh wave of excitement. In 2023, we saw something called ordinals take off. Basically, a way to create NFTs, non-fungible tokens, directly on the Bitcoin blockchain itself, kind of expanding its use cases.
So more than just currency.
Potentially, yeah. And then December 2024, that was huge. Bitcoin hit $100,000 for the very first time.
$100K, what drove that surge?
It wasn't just market hype. It was this powerful mix of things. Market dynamics, yes, but also some really significant signals from the political and institutional worlds.
Political signals? Like what?
Well, you had growing talk about crypto regulation, but also support. President-elect Trump, for instance, made this big statement about making the U.S. the crypto capital and even setting up strategic Bitcoin reserves for the country.
Wow, national Bitcoin reserves.
Yeah. And it wasn't just talk at the federal level. You saw states like Texas and New Hampshire actually starting their own state-level strategic Bitcoin reserves in 2025. That signals a major shift in how governments are viewing this asset.
And institutional signals, too.
Definitely. BlackRock, the world's biggest asset manager, came out in December 2024 and actually recommended that investors could consider putting up to 2% of their portfolio into Bitcoin.
2% from BlackRock?
Yeah.
That's huge validation.
It's massive. These kinds of endorsements from the heart of traditional finance and government lend Bitcoin a kind of legitimacy it just didn't have before.
So, given all this history, all this recent buzz, you might be sitting there wondering, okay, how do people actually get involved with Bitcoin now? We talked about mining, which is pretty complex for most folks. Buying it on crypto exchanges is probably the most common way, right?
That's still very popular, yeah.
Yeah.
Setting up an account on an exchange like Coinbase or Binance or Kraken and buying it directly.
But there's been a real game changer recently, hasn't there? Something that makes it maybe easier for traditional investors.
Absolutely. The big story, especially in the last year or so, has been the rise of Bitcoin exchange-traded products, or ETPs, specifically ETFs, exchange-traded funds.
Like the iShares Bitcoin Trust, IBIT.
Exactly. IBIT is a prime example. These ETFs let you get exposure to Bitcoin's price movements, but you buy and sell shares of the ETF right through your regular brokerage account on the stock market.
So no need to worry about digital wallets and private keys.
That's the main appeal for many. It removes a lot of those operational hurdles, the security responsibilities of holding the Bitcoin yourself. Even potential tax complications can be simpler. You're buying a familiar product, an ETF share, that tracks the price of Bitcoin.
And IBIT seems to have really taken off. Since it launched, January 11th, 2024, it's been like the most traded Bitcoin ETP out there.
It certainly has dominated trading volumes, yeah. Which can mean potentially lower costs for investors when buying or selling shares. And having BlackRock, the biggest asset manager on the planet, behind it, using Coinbase Prime for secure custody, that adds a level of institutional credibility.
And just a quick reminder here, if you're finding this kind of deep dive into finance and assets like Bitcoin interesting, do give us a like and subscribe wherever you get your podcasts. It really helps us keep bringing you this content.
Definitely. But coming back to these ETFs, while they offer this amazing convenience and access, it is so important for listeners to understand the risks. They aren't magic.
Right. Still Bitcoin underneath.
Exactly. And IBIT, for example, it's not structured like a typical investment fund, like a mutual fund. It's not an investment company under certain laws or a commodity pool. So it doesn't have all the same regulatory protections you might expect from other funds. Investing in it or any Bitcoin product carries significant risk. You could lose a lot of money, potentially all of your investment. The share value is tied to Bitcoin's price, which we know is volatile. It can swing wildly based on market mood, news, security scares, hacks are still a threat, and even things like competition from potential government-backed digital currencies down the line.
And the fees, I guess.
Yes, that too. The amount of Bitcoin represented by each share will actually go down over time because of the management fees and other expenses the fund charges. So convenience comes with costs and significant risks. It's definitely not for everyone.
Okay, so bearing all that complexity and risk in mind, where does this leave Bitcoin in the long run? What's its ultimate role shaping up to be? Is it money? Is it digital gold? Something else entirely? The debate among economists, analysts, it's still fierce, isn't it?
Oh, incredibly fierce. You've got some really prominent voices, Nobel laureates even, like Joseph Stiglitz, Paul Krugman, Jean Tirole. They've been very skeptical, calling it an economic bubble, questioning if it has any intrinsic value at all. Tirole basically asked if it'll just collapse eventually, or maybe, just maybe, become like a new gold.
So serious doubts from serious people.
Absolutely. Their skepticism often comes from the fact it's not backed by anything physical and there's no central authority guaranteeing it.
But then you have others equally serious who see it very differently, maybe even playing a role in less mainstream areas.
Exactly. You get figures like Jerome Powell, the Fed chair, who's described it more like a digital competitor to gold. A store of value, yes, but a very speculative one, not really a replacement for the dollar in everyday payments.
Okay, digital gold, maybe.
And then, perhaps more controversially, you have someone like Kenneth Rogoff, former chief economist at the IMF. He argued in 2025 that Bitcoin actually does have substantial value, partly because it's used in the underground economy, competing with the dollar in illicit transactions, which he estimated could be like 20% of the world's GDP.
Wow, that's a different take.
It is. And what's kind of funny, or maybe ironic, is that through all these debates, through all the ups and downs, Bitcoin's most consistent feature has been this extreme price volatility, which paradoxically created the whole HODL thing.
Right, HODL. Hold on for dear life.
Exactly. That culture of just holding on, refusing to sell, especially when prices crash. It's become part of the Bitcoin identity almost.
So it really feels like Bitcoin is still figuring out its final form, its place in the world. Could it ever really work as a global everyday payment system, given the transaction fees sometimes, the speed issues?
Those are major hurdles for it to be like Visa or MasterCard for
Yeah.
sure.
Or is its main destiny just to be this, speculative digital asset, a store of value, maybe like gold, that sits in investment portfolios, but isn't used to buy coffee?
And that really brings us to the big question, doesn't it? How is this all going to shake out? You've got the technology constantly evolving. You've got these unpredictable market forces pushing and pulling the price. And then you have governments and regulators trying to figure out the rules. How does that complex dance shape Bitcoin's future role in our financial system?
It's a massive question, constantly evolving.
It really is. We're watching it unfold in real time.
That's a really powerful thought to end on, and definitely something for all of us to keep thinking about. So,
Yeah.
just to recap, we started with Bitcoin's surprising birth, Satoshi, the Genesis block message, those incredibly expensive pizzas.
Can't forget the pizzas.
Never forget the pizzas. We traced its wild ride from the fringes to institutional adoption, hitting that $100,000 mark amid big political and financial endorsements. And we looked at how you can engage with it now, including these newer, maybe more accessible routes like the iShares Bitcoin Trust ETF, IBT.
While remembering the risks.
Absolutely. Always remembering the risk. So for you listening, here's a final thought. Bitcoin, despite the crazy price swings, the controversies, the arguments about what it's really worth, it has undeniably kicked off a revolution. It's changed how we think about digital stuff, about assets, about finance, without middlemen. What could that mean for the banks, the traditional systems we rely on? And maybe more personally, how might it change your approach to understanding value, interacting with money in the years ahead? If you found this deep dive valuable, please do hit like and subscribe to the deep dive on your podcast app. It helps others find the show. Thanks so much for joining us today. We look forward to the next one.